Welcome back to the Saving with Steve show. I want to thank you for joining us. You know what? We had a wonderful conversation with Wayne Dunlap talking about how you can travel the world for less than what it costs living at home. We talked about, financial literacy for kids. And you know what? We're going to talk about something that's going to be going on here. We're just hit wildfire season. You know what? Extreme wildfires on the West Coast of the United States have become a common theme. And you know what? People have, disasters from tsunamis to hurricanes, and they happen throughout the United States. And there's fires that happen in Texas and so on. Now, the reality is many homeowners are at risk. And you know what? The reality is when it happens to them, how do they go about rebuilding their lives? And you know what? They worry about things like, will the insurance provide enough funds to take care of all the repairs? Okay. Now, we have Steve Severaid here. He's been a licensed senior professional public adjuster for more than 30 years. He works to advocate for individuals, communities, businesses that have suffered major losses. His work has earned him a reputation as a respected industry expert in handling a broad range of residential, commercial property, I'm going to say losses, damage, ranging from fires, floods, earthquake, vandalism, tsunamis, and catastrophic events. He has a team that's including structural engineering experts, inventory specialists, forensic accountants, insurance attorneys, former insurance claims representatives to secure the most favorable outcome from every insurance property claim. Now, here's one of the big things. He's represented victims of major losses throughout the United States and worldwide in places like Thailand, the Caribbean, Puerto Rico, Florida, Texas, Alaska, Hawaii. You know what, Steve, welcome to the show. I'm glad you're here.
Well, thanks for having me, Steve. Really appreciate it.
Yeah, I think people would like to start out with, besides knowing that you have a great tenure, wonderful background and experience, it's what is a public adjuster? Because you're a public adjuster for Greenspan Company, International Adjusters. I got that right?
Adjusters International. You're close.
Adjusters International. I got started on the wrong brain plate here. Sorry about that. But what's a public adjuster? And how can they help, people, homeowners save money if they have a claim?
Yeah, a lot of people have never heard of a public adjuster, but a public adjuster is somebody that's licensed by various state Department of Insurance to represent the policy holder, never the insurance company. So just as you have an insurance company that brings out an adjuster, either an employee of the insurance company, or they hire what's called an independent adjuster, which doesn't make them independent at all, actually, because they report to the insurance company and work for the insurance company. People have the opportunity to balance the scales with the insurance company and all their experts by bringing in their own expert, a public adjuster, who advocates for their interest exclusively in preparing, presenting, and ultimately negotiating the claim to get the best benefit from the insurance policy they purchased.
Now, okay, so let's just talk about some of the pitfalls that people have nowadays, especially when they're looking at, let's just go through I'll tell you what, I know somebody that we talked about early in the week that had been with their carrier for 35 years to lo and behold, find out for 3 reasons, the claim that they had was just not covered. And you know what? She thought that, hey, I have this coverage. It's good. There's no issues. I just didn't think about it and kept paying it. So why should people who have had a policy for 20, 30 years be concerned about the type of policy that they have, or more importantly, what's in that policy?
Yeah, it's a good question, Steve. There's certain events, and I think we talked about that situation was a little bit unique in the damage, but one of the problems people have is they buy their insurance policy 20 or 30 years ago, and they don't do regular checkups. The insurance policy has an item in it that raises the limit just a little bit each year, but that often doesn't keep up with inflation, especially in today's market with all the inflated costs of construction materials and the lack of labor. But even before that happened, these policies that people have for 10, 15, 20, 30 years oftentimes aren't representative of what true rebuilding costs would be should they ever have a fire or suffer some kind of tragic loss. And so it's really important that you do a more current evaluation. Don't just rely on the fact that you've had this policy all this time, because you might not be covered nearly as well as you think you are.
So let me make that real simple for people who are listening. So let's say you have a house that's 30 years old, you're in a wildfire and the house burns down and it needs to be replaced. Okay. They have to replace that house using the current building codes, as opposed to using a 2x4, they have to use a 4x4. As opposed to using 6-gauge wire, they have to use 8-gauge wire. They can no longer, they can't use galvanized pipe, they have to use copper pipe. Now, when we're talking about lumber, lumber's 300 times more expensive than it was last year?
Yeah, it's about 300% higher.
Yeah. So when you look at that and you say, hey, you know what, it's going to cost $200,000 to replace my house. But if they're framing that house, it might cost $100,000 just for the lumber for that house. Meaning if you only have $200,000 of coverage, you might have to write a check for an extra couple $100,000 to make sure your house gets built. Is that correct?
Yeah, you've actually touched on a couple of things there, Steve. First of all, is making sure that you have the proper amount of insurance for rebuild costs. You're right, and those rebuild costs has escalated, and there's often a provision in the policy that gives some extended coverage beyond the policy limit, but it's only a certain percentage, so you can't really rely on that as your buffer or your cushion. The other thing you brought up was changing the building materials because of the latest building ordinance or law. And that's really a separate part of the policy. The standard policy doesn't give you any coverage for that. So oftentimes there will be some coverage, but sometimes it's limited to 10% of the policy or some other limitation. So if you're in an older home, especially, and you're in a wildfire zone, you really want to look and see what that could look like for you. And you might want to increase your coverage and make sure you have enough coverage for those changes in the building codes, because otherwise you could be on the hook for those differences in between what you had and what you're now forced to build with.
Now, you know what, you've dealt with earthquakes, and you know what, the state of California has the California Earthquake Association. And even, you know what, a lot of people will purchase that policy thinking that they have it completely covered. And you know what, is that necessarily true?
No, well, it's gotten better though, Steve. I'll tell you, right after the LA earthquake, the Northridge earthquake coverage became almost impossible to get. They came up with this California Earthquake Authority. The coverages were really bad. The deductibles were really high. That market has loosened because we haven't had a major earthquake event. So it is more affordable and the coverages are getting better. But those coverages certainly are not as complete and don't cover you nearly as well as your typical fire policy covers you. So you've got to realize when you're buying earthquake insurance that you're still going to have some skin in the game should something bad happen to your property.
So it's just one of those things where the earthquake coverage doesn't cover everything you think it is. And the reason why I'm saying that is, you know what, people should understand what's in the policy. Okay, not from a technical level, but more like what exactly does it cover? Like, for example, your pipe bursts, they're not going to fix the pipe, they're going to fix the things around the pipe.
Well, the good news there, Steve, is that the pipe is the cheapest thing to fix. If they got to tear apart your whole house to get to the pipe, they'll pay for that. They just won't pay for that one piece of pipe. But you are correct. They don't pay for the pipe. They pay for all the damage it caused and the damage you caused to get to the pipe to fix it.
Now, what I need to do is I need to take a quick little break. I'm going to just do a little article here. I would like to thank scoremaster.com for sponsoring this segment on our show. Did you know the average American has 97 points they can add to their credit score, but no idea how to get them? The data scientists at ScoreMaster have cracked the code on how. Adding 97 points to your credit score is like found money. It means fast loan approval, huge discounts, low interest rates, and everything from buying or refinancing a home to leasing a new car or just applying for a credit card. How fast is ScoreMaster? One member raised their credit score 33 points in just 5 days, another 43 points in a couple of weeks. ScoreMaster is so easy, it takes a minute just to get started. And if you hurry, you can try ScoreMaster for free. That's right, try ScoreMaster for free. See how many points you can add to your credit score. So go to scoremaster.com/savings. That's scoremaster.com/savings. Again, scoremaster.com/savings. Now, stick with us. We're going to be right back with more from Steve Severaid, the public adjuster here with Greenspan Co, Adjusters International. Hey, I got it right.
You got it right. You're getting better. By the time we're done with the segment, you'll have it perfect.
No, sometimes you get your brain trained on something and you just, it's funny because I read through people's names 8, 10, 12 times to make sure I get it right. And I pronouncing your name right?
It's Severaid, but that's
Severaid. Okay,
often,
there it is.
It's okay. I'm used to Severaid. A lot of people say it that way, so it's not a problem.
Yeah, my last name, most people don't screw it up.
What's your last name?
Sexton.
Sexton. Oh, nobody's going to screw that up.
No, not since I was little. Okay, so Cameron, we're moving into segment 5. Hello, welcome back to the show. I want to thank you for joining us. You know what? Oh, darn it. I need to redo that. Okay. Cameron, we're moving back into segment 5. Here we go. Hey, welcome back to the show. We're going to be talking with Steve. Here's Steve. Almost did it again. Was it Severaid? Severaid, right? Severaid. That's right. Okay. Got my brain all hicked up today. Here we go. Hey, welcome back to the show. Again, in that first few segments, we had a wonderful time with Wayne Dunlop. Now we're talking with Steve Severaid, public adjuster with Greenspan Adjusters International. Hey, before we jump back in, I want to truly thank you for tuning in and letting your friends and family and associates know about the show. All the replays are available at www.savingwithsteve.us. If you're enjoying the stories of helpful information inside on Saving with Steve, then I encourage you to subscribe to our Spotify or Apple channel so you never miss a show. Check out a few of our affiliates at UK Health Radio, BBS Radio, Talk Radio New York City, E360 TV, Las Vegas TV networks. All these networks are dedicated to empowering you to solve problems, uplift your spirit, and live a life of financial and personal freedom. Also, you can follow us on Facebook. Join us at the Saving with Steve Sexton Insider Club to get replays, guest gifts, behind the scenes, the whole shot. Now, we're back here talking with Steve Severaid. Now, we're talking about wildfires. You know what, Steve, what should people be doing now to get prepared? I mean, looking at their policy to get prepared if they're dealing with a wildfire or even a business owner that could get hit by a natural disaster, vandalism, a tsunami, or whatever the case may be.
Well, it's a good question, Stephen. The first thing I'd tell you is you don't want to wait until after an event to get your policy or ask your agent for a copy of your policy to look through it, because you can't change anything at that point. It's what's done is done. And what you have to work with is what you bought before the disaster struck. So really important to get that off, have a conversation with your agent or your broker and talk about what today's values are and see if you need to adjust any of those things. Make sure that you know what you're covered for. And if you choose to not cover for certain things, well, make that a decision that you've made rather than one that's by default. And the second thing I would encourage everybody to do is go through your home or through your business and take a videotape. Open up the drawers in the kitchen, do a quick video, go in the closets, just do a quick video of everything. And then make sure that you secure that video to the cloud. Don't keep it in your house, because if it burns down, you will lose the evidence of that. But that's really valuable when you need to recreate. If your home burns to the ground and there's nothing but ashes left, and you're now stuck to recreate everything that was in your home down to pencils and paper clips and how many shoes you had and socks and all that stuff, it's a really huge job. It's part of what we do at Greenspan. We have inventory specialists to help prepare that. But I can tell you it makes our job a whole lot easier if somebody's got good documentation. And that can be a simple video, take you 10 minutes through your home. And it's such a good foundation for developing an insurance claim should that ever happen to you.
You know what? I used to work for the Automobile Club as an executive. And I talked to many people when there was a fire. And you know what? It's really hard for an insurance company to replace a couch that they've never seen. So if you have that nice leather couch that you spend $10,000 or $20,000 on, it's really hard for an insurance company to replace that. But if you have a video of it, it makes all the difference in the world. So I encourage that. In fact, we've done that. Now, all insurance companies are not created equal. There's new companies coming to the market. They're technology companies. You know what? Should cost be a primary driver of who gets your insurance who you place your insurance with?
It's a funny thing. A lot of people buy insurance for their home because they have to, because they have a lender and the lender requires them to have insurance, and they look at it more as just something that they have to buy. They don't have a choice. So they want to get the cheapest product they can to make the lender happy. And that's really not the right way to do it. And I can tell you that anybody who's actually had a loss doesn't buy insurance based on that theory, because they've actually used it, put it into practice, recognize how important it is. So there's some new online like tech companies coming into the market where they're not really doing a great analysis, and they're selling you a product that doesn't have nearly as much inside the policy. And as a consumer, you don't really know one policy from another, but I can tell you that more comprehensive policies with higher sublimits and bigger coverages and cover you for more types of losses is really important and valuable, because you don't know what might happen to you. So to buy something online without really knowing, or some big box stores are now getting in the insurance business and selling insurance, it's all about the price. And that's really not the right way to be protected. For a little bit more money, you can get a lot better coverage and a lot more comprehensive coverage, and a little safer bet, Steve.
So when we talk about coverage, help me out with an example of that.
Well, we talked about building ordinance or law coverage a little while ago, Steve, and that's an optional coverage that some policies don't have any coverage for. And if you're in an older home, that could be really important. Some policies don't have an extended replacement cost. I mentioned that earlier. So if you buy a policy for $500,000 on your house, oftentimes you'll be able to get what's called extended replacement cost, which will give you some percentage above that number should it cost more. And it might be 25%, it might be 50%, it might be 100%. And so that can be a big difference in coverage if you're looking at one product that has 0% above the policy limit, and another product that doubles your policy limit. That could be hugely impactful, especially when we're coming into a labor crisis and a material crisis.
You know what, that's really important to understand, especially with the value of homes as they increased since all this buying frenzy. And you know what, it makes a lot of sense to really evaluate with whoever your agent is to make sure you know exactly what you have, because it's what you don't know that actually hurts you, especially when it comes to insurance. Now, you know what, when you have somebody in the wildfire areas, what's the best way to prepare their home if they're dealing with the wildfire area? You know, can you help us with that?
Well, obviously, aside from insurance things like videotaping and making sure you have your policy documents and you're covered properly, aside from that, a lot of people recommend you do a lot of hardening. So that means clearing brush out from your home so that you get rid of any trees that are overhanging near your roof that could catch fire and then catch your home on fire. Just be thinking about the hazards that are surrounding your property, and how by not tending to that dried grass out there, the brush out there, could actually put you in a worse position should some event come through the area.
Yeah, it seems like it would make a lot of sense to have oily brush 50 or 60 yards away from the house, as opposed to having a lantern set on fire in front of you, next to your house. I see. Okay. So, you know what, could you help?
Pretty obvious stuff, Steve, but you know, a lot of people just don't think about it, but it's something to look around your property and pay attention to.
No, you know what, if you've never had a wildfire, you wouldn't even think twice about it. In fact, you probably don't even pay attention to a lot of things, but if it hits you right in the face, and it hurts, and you don't want it to hurt. So now, what are things, if somebody's involved in a residential disaster, meaning like they're involved with a wildfire and their house gets burned down or partially burned, okay, what is the list of some of the things that they should be doing right when that occurs?
Well, obviously, taking care of your family is a priority, and having a place to sleep is a priority. So, the number one thing is find a place. Don't find a place too quickly, because some people will run out and they'll rent an apartment or they'll rent a house right away, and then in a month or 2 months they get claustrophobic and they realize that they've ran out and did something quickly. Take a little bit of time, get some hotel rooms. Figure out where you want to be. This is a long process when you're a victim of a wildfire. It's not over in 60 days. It takes months and months and sometimes years to recover. So recognize that when you You're out of your home, find a comfortable place to stay, but make it temporary while you get your head on straight and figure out what to do. Notify your insurance company of the claim. Keep all of your receipts for everything you're spending money on, even if it's a cup of coffee at McDonald's in the morning. All these things are important when documenting your claim later, and it's hard to find a receipt that doesn't exist 6 months from now. So, and then on the receipts, make sure you write little notes to yourself. So if they're a nondescript receipt, you can figure out 5 months from now when you're going through receipts, what was that? What did I buy? I don't even know what it was. So keep notes on it and document every conversation you have with your insurance company. And I would also say, interview a qualified public adjuster to decide whether you want extra help and attention to put your claim at the top of the stack and make sure that you get the best response.
You know what, Steve, I want to thank you for sharing this information with us today. And I want to add this. You know what? I used to work for an insurance company, property casualty company. And I remember that they really didn't like, you know what, public adjusters. And the reason being is because they paid out a lot more money.
Right, that's true.
Yeah. So it was one of those things where you were far more comprehensive, because I also know when you're captive working for a company, you have certain guidelines that you have to follow, and you have certain expenses that you can, you know, certain limits and all that kind of stuff. When you have somebody who really understands what's going on and can detail things, obviously you're going above that limit. So, you know what, I think it makes a lot of sense for somebody to take the time to find a public adjuster, a good one that can help them get more for their claims so they can get their house built back up or their business and so on.
I totally agree with you, Steve.
Now, I want to tell everybody this. You know what, Steve Severaid and Greenspan Company International Adjusters have, you know what, been graced us with some additional information. So if you go to the resource page on www.savingwithsteve.us, you can get a sample residential inventory list. This will allow you to detail and categorize all price, exhibits, and images you need to prepare for a personal property claim. If you're in that situation, you're better off doing this in advance. You know what? There's a business owner's guide, a residential recovery checklist. Even if you weren't able to write down everything that Steve said, wildfire factors to consider, frequently asked questions when it comes to suffering a major loss, why your business needs to prepare for a disaster plan now. You know what? Some great information. You're going to want to go to the website. Steve, if somebody needs to get a hold of you or Greenspan to get a public adjuster, how do they go about doing that?
We're easy to find online. Our website is greenspanai.com. You can also reach our office at 1-800-248-3888. And we're available 24 hours a day, 7 days a week. We respond to disasters. It's part of our business. So it doesn't matter whether it's a Sunday at 8 o'clock, if your home burns down or you need help. We know the exact things that need to happen to take place right as the fire trucks are leaving, and we're always available.
Steve, thanks for joining us. This is Steve Severaid, the Greenspan Company, Adjusters International. Hey, I appreciate it. Possibly like to have you back again, especially if we, you know what, disasters happen. There's hurricanes, floods, earthquakes, the whole shot. I would like to, you know, possibly have you back when those things are curved, not to say you're the disaster guy, but I think there's some insight for people who are dealing with that or not dealing with it and would like to know. That would be timely. So again, thank you. Hope to stay safe and healthy and enjoy that boat ride this weekend.
Thank you, Steve. It's a pleasure having you. I look forward to being back on your show as well.
Sounds good. We'll see you. Bye-bye.
Bye.
Again, everybody, that was Steve Severaid with the Greenspan Company. We're grateful to have him here. And you know what? We had a great show with Wayne Dunlop, financial literacy for kids, and how to deal with an insurance claim from a public adjuster, Steve Severaid. I hope you have a wonderful week. Look forward to seeing you next week. Bye-bye.